So I think that, in quieter moments, maybe even, behind closed doors, that even the Fed, there's probably been some whispers about, well, what if? And that what if being, if we go to the new system, how important would gold be? Could it be? What would it do? Could it solve the problem? Would it be better recognized?
You're watching Silver News Daily. Subscribe for more.
Did you know that in a world where currencies crumble and control tightens, silver could be the ultimate shield? David Morgan believes this precious metal isn't just a relic of history. It's the key to navigating the chaos of central bank digital currencies and a failing fiat system. Stay tuned, because what we're about to uncover could completely change how do you see the future of your wealth.
I think that, there's been proposals out there. I mean, I was lucky to interview Dr. Judy Shelton on, her book on, using the treasury bond market tied to gold to kind of put some credence back into the system, some discipline back into the system. The further you go down these trails of massive inflations where they end in a bad way, usually come back to gold, as I said earlier. And I think that's probably a likely scenario. How that manifests remains to be determined. But as you just said, when you got an HSBC, you got others that are throwing them out there, that idea starts to compound. So I think that, in quieter moments, maybe even, behind closed doors, that even the Fed, there's probably been some whispers about, well, what if? And that what if being, if we go to the new system, how important would gold be? Could it be? What would it do? Could it solve the problem? Would it be better recognized and adopted? And all those kinds of questions. I mean, right now, there's pushback in several states in the United States that at a state level, so we don't want to accept CBDC. And I'm on that side, at least right now. But lots of questions. I mean, when you get to the end of the great inflations, we see what we're seeing. We see competing currencies, gold and silver, of course, the main competitors, but you see all these CBDCs and other proposals. There's barter clubs. There's people that issued their own currency for time units. And the wooden nickel, I mean, that's what sprung out of, a depression earlier in our U.S. history. So lots to think about. It's kind of fascinating in a way, but there isn't really one solid, this is the way it's going to be. We're going to start it, November 1st, 2025. We're not seeing that yet. And I'm not sure that we will. We might see kind of a wishy-washy difference, CBDCs proposed, like I just mentioned with India, and maybe they'll fine-tune it and they'll keep tuning it, and they'll get to a point where other nation states will adopt a CBDC and join in on the new system.
Central bank digital currencies, or CBDCs, are being hailed as the future of money. But are they really a step forward or a tool for unprecedented control? With countries like India and China leading the charge, these digital currencies promise convenience but come with strings attached: surveillance, limited privacy, and centralized control. David Morgan argues that silver offers a stark contrast to centralized, private alternative that could safeguard individual freedom in a system increasingly dominated by digital oversight. Could silver be the lifeline we need? Let's delve deeper into this critical debate.
Well, as you know, there already is on the private sector. I mean, one I'm associated with lists, with Load, there's Kinesis, there's Glint, there are others out there. And I think it's kind of a logical progression. I mean, most people that are crypto investors or speculators, I'd say for the most part, are aware about a fiat money system. And yet, when you look at what a lot of these cryptos are, is they're just a digital fiat, which the dollar really is. I mean, we still have physical pieces of paper, but that's such a small percentage of transactions, it's almost not worth counting. So now you've got gold behind it with HSBC and others. So you got the mainstream, and you also have the alternative financial system. So I think that's the direction it's going. I mean, I made a very bold prediction, right or wrong. I suggested that the next major leg up in the cryptocurrency will be based upon asset-backed cryptocurrency. So it could be cobalt, could be real estate, could be oil, could be energy, it could be gold, it could be a lot of different things, but where there's something real attached to the token. And I think that's the direction it's going to go. So falling back to what I said a moment ago, that ace in the hole, that gold backing that could take place, maybe they just want to do it in 2 steps. They've already planned it out that, they're going to throw it out there with no backing, with the plan B being as soon as we get this much resistance, we'll come out with this campaign and everybody will fall in line because it is tied to gold. I don't know, but that's just my thought.
Fiat currencies have one fatal flaw. They can be printed endlessly, eroding their value over time. Under modern money theory, this unchecked printing is seen as a solution, but it often leads to rampant inflation and a collapse of purchasing power. David Morgan points out that in times like these, silver becomes more than just a metal. It's a stable store of value, immune to the whims of monetary policy. But how does this precious metal hold up as a hedge against inflation? Let's explore why silver might be the antidote to the dangers of fiat.
It's a little tricky, because it's hard for me to not be biased because I am. I've been looking at, monetary history for most of my life. And, usually when you get in the situation that we are in now, where currency is failing because there's so much printed that people don't trust it, you go back to some type of a gold standard or sound money principles. However, this time it's a global phenomenon because the dollar reserve currency, being a dollar, is failing, but it's failing less against other currencies. So my take is, as objective as it can be, is that gold is the monetary hitching post of the universe. It's the ultimate money. And I think it's used as reserve for everyone, including China and India, as a last resort. I think that if the CBDC doesn't float or get the adoption that's required for the central bankers to be happy that they have put us into a new system, that they have this ace in the hole, meaning gold, that they can use as a carrot to push the system forward. So in other words, a CBDC that's tied to gold some way, shape, or form. That's my take. There's others that think along those same lines. Is that exactly what they're thinking? I don't know. But it is interesting because you got to look at the facts. And facts are the keep accumulating. Well, they're going to a MMT, modern money theory, where you just print and it's not backed, and that's what they want. They stated so. Then why are they buying gold? I think the logical conclusion would be because if it doesn't work, they have something to fall back on. But, there's other thoughts.
Throughout history, when financial systems have faltered, societies have turned to tangible assets to restore stability, and silver has always been at the forefront. Unlike fiat currencies that come and go, silver has maintained its value and liquidity across centuries, proving itself during monetary resets and economic upheavals. Take, for example, the post-World War II Bretton Woods system, where precious metals like gold and silver underpinned global monetary stability. Silver played a pivotal role as an affordable alternative to gold, accessible to individuals seeking protection against volatile markets. David Morgan emphasizes that as central banks worldwide accumulate gold in preparation for potential shifts in monetary policy, silver's complementary role becomes even more critical. Its affordability compared to gold allows broader access, making it an indispensable hedge for both nations and individuals alike. Even beyond financial systems, silver's utility in industrial applications has ensured its intrinsic value. From ancient trade routes to modern economies, silver has served as a bridge between wealth preservation and economic functionality. Could its historical reliability be a roadmap for navigating today's uncertain financial terrain? Let's look at how its legacy shapes its potential in the evolving monetary landscape.
Yeah, I've actually been interviewed by a financial writer in India recently a couple of times, and I'm on his LinkedIn, and they sent it to me. It's from the Telegraph in India, the India Telegraph. And the Bank of India, the central bank, is issuing a CBDC on a pilot program in 4 cities. And they're pushing that direction. So it's definitely what you just said. It's a central bank digital currency issued by the central bank of India. And they have it. It'll be in Mumbai, New Delhi, Bangalore, and Banswar, which I'm sure I butchered that last city's name. But so they're serious about it. Retail digital rupee will be a form of digital token that represents legal tender. The RBI will issue digital currency in the same denomination as paper currency and coins, and the token will be distributed by the banks.
How big of a development is this in central bank digital currency, and how do you think it could change how countries are moving forward in this respect?
Well, it just adds to it. I mean, if you look at the number one, that's China, and they've had their CBDC for some time. It's basically the way that, in my opinion, the globalists or the banking elite want to take the world. And India's got over 1 billion population. China's 1.4 billion purportedly. So you're looking at about, pushing toward 3 billion people on the planet that would be using the CBDC. That's a significant percentage. And usually, in my opinion, they go for the people that are already, let's say, the most compliant. If you remember not too long ago, back in India, under Modi, they changed the amount of physical dollar or physical paper rupees that were used. And that was kind of forcing everybody that was not banked to become part of the system. The goal of the bankers is not only a CBDC, but to get everybody into the system. So I think it's over 1 billion people. I looked it up once, and memory serves, it was something like 1.5 billion people on the planet are not banked. And they just use cash, in their everyday affairs. But the bankers want everybody to be tracked, traced, and taxed. So they'll force everyone that they can into this system. So there's a few underlying ideas that go along with the CBDC.
Silver isn't just a financial safeguard. It's a metal that powers the modern world. Its growing industrial demand is reshaping its role in the economy, making it indispensable in key technologies driving the green energy revolution. Consider this. Silver is a critical component in solar panels, with each panel containing nearly twice as much silver as it did 5 years ago. This increase is not by chance. It's due to the metal's unparalleled efficiency in conducting electricity. As governments around the world push for renewable energy solutions, the demand for silver in photovoltaic cells continues to skyrocket. But that's not all. Electric vehicles, another cornerstone of the green energy transition, depend heavily on silver for their advanced electrical systems. From car batteries to charging stations, silver's conductivity ensures seamless energy transfer, solidifying its place in the infrastructure of tomorrow. David Morgan highlights this dual role of silver, not only as a store of value, but also as a critical material in industries poised for exponential growth. With industrial demand breaking records year after year, the case for silver as a long-term investment grows stronger. The question is, will this surge in demand outpace its supply, pushing prices to unprecedented levels? Let's dig into the implications.
Absolutely. I mean, first of all, it's so rare. It's 15 times rarer than gold. Secondly, 70% comes out of South Africa, and they're having problems mining. They're having problems with electricity. They're having political issues. And with all those tensions, I thought that you'd get at least back to what most of the platinum miners mine now, which is about $1,200 US. And we're still sitting, under that price. So I think if you have patience, I think it's about the least risky metal at this point in time. I think there's more downside potentially in gold and silver than there is platinum right now. I mean, if you start buying platinum under $1,000 US, you're one of the best platinum miners in the world because you're actually owning the metal without having to mine it. It's already in a investment grade form, and you didn't have all the effort and the worry and the concerns that it takes to run a mining operation. So I do like it, but I am surprised. I really thought at the beginning of the year when, a year ago or more, but basically it's been a year since I've kind of been pounding the table on platinum. You asked me last year, and maybe you did, where was platinum going to be? I would say higher. And I think it's off 7% for the year so far. I forget the exact number. I have to look it up. But I'll probably report that on one of my last 2 reports here on my weekly perspective. I'll go over all the metals, what they did for the year. I do know that the XAU and the HUI, both the major indexes for the mining shares, have not performed as well as gold itself. And that's disheartening for people that invest in mining equities. I mean, basically you get a leverage factor when you buy and we have at the market report done better than the averages, which I usually do, but still it's again disheartening when you see what gold prices have done and what the margins are for some of these better producers and what value these stocks actually represent, but no one seems to be paying attention.
Silver's demand has been outpacing its supply for years, leading to a growing structural deficit in the market. Since 2021, the silver market has experienced consecutive annual deficits, with 2024 marking the fourth straight year where demand has exceeded supply. What does this mean for silver's future? Let's break it down. On the demand side, industrial applications, especially in renewable energy and electronics, have surged, with global silver demand forecasted to hit 1.21 billion ounces in 2024. At the same time, investment demand in certain regions like India remains robust, while global recycling efforts, though increasing, haven't been enough to bridge the gap. On the supply side, silver production has stagnated over the past decade, remaining relatively flat at around 951,050 million ounces annually. Even higher silver prices have failed to incentivize significant increases in production, leaving the market in a persistent deficit. This imbalance is draining above-ground silver inventories, putting upward pressure on prices. Analysts have speculated that if these trends continue, silver prices could rise sharply as the market seeks equilibrium. Could this scarcity, paired with rising demand, signal a silver price rally in the near future? The signs are there and will uncover even more in the next step.
So I looked at the platinum palladium market, and I used to trade actually a fair amount of platinum palladium. Almost every January, if you go long, you're going to make money in those metals. But regardless of my past, I did put on a maximum trade, which is called a spread. And the spread was that palladium would go down in price and platinum would go up in price. The beauty about a spread trade is it's less margin and you don't have to be half right and you can make a lot of money. So palladium did go down from roughly almost the 3,000 level down to par with platinum. Platinum basically went sideways. But like I said, but still the spread worked because what I'm saying is that the two will not necessarily converge, but move toward each other. And that happened. Now there's information I put out on my Twitter account, as you mentioned, that palladium's use is diminishing and won't be used as much in automobiles or in the auto sector as it was. And that's really because there's too much supply right now across the board in trucks and cars on a global basis. And so the slowing down isn't because, it's because the economy is contracting. Platinum, on the other hand, is used as well as palladium for catalytic converters. And it's actually looking like a stronger market. So right now I'm more bullish on platinum than palladium. And as an aside, which is interesting, Elijah, as you know, I just got back from the New Orleans Gold Investment Conference. And I never mentioned the word platinum until my speech, but there were like 3 people at the conference from the platform that talked about platinum, which I thought was unusual because you hardly ever hear platinum mentioned. And it seems that some of those people in the hard money group are mentioning platinum as a pretty solid investment. Certainly underperformed what it usually does. It uses as a premium to gold, as most of us know, and it's about half the price. If it caught back up to just par with gold, you would double your platinum position, which you could swap into gold if you so desired. But I would tread lightly on it, even though I like it and I'm involved personally. It's sort of the icing on the cake. I wouldn't take a big platinum position. I think gold and silver are more destined for greatness than platinum, but platinum would be something to consider.
Silver's potential isn't just tied to its historical or industrial value. It may also play a transformative role in emerging monetary systems. As the global financial landscape evolves, the idea of asset-backed cryptocurrencies is gaining traction, and silver could become a pivotal part of this digital revolution. Consider this. While gold-backed digital currencies are already making waves, silver's unique properties, its affordability, divisibility, and historical monetary role, make it a strong candidate for integration into decentralized financial systems. Imagine a silver-backed cryptocurrency that provides tangible value in a digital token, bridging the gap between traditional wealth preservation and cutting-edge financial technology. David Morgan suggests that silver's utility goes beyond a simple hedge against economic uncertainty. In scenarios where trust in fiat or central bank digital currencies erodes, silver could anchor local barter systems or black market economies due to its intrinsic worth and portability. Its dual role as a tangible asset and a potential cornerstone of digitized financial systems makes it an adaptable tool for navigating uncertain futures. Could silver-backed tokens or localized economies be the next step in decentralizing monetary control? As nations and individuals seek alternatives to centralized systems, silver's potential in this new paradigm is becoming increasingly clear. Let's explore how market trends might align to make this vision a reality.
Silver's under the 50-day moving average. I think we're still in the consolidation phase. I think we're still going to go sideways in what I call an indecision pattern. And I think indecision pattern is a good name because with Trump coming into office, there's a lot of uncertainty, which there always is. But now with the new administration, how many changes are going to take place immediately that the old administration put into place that kind of cancel some of the Trump ideas in the first time they were in. So I think the market's just going to kind of wander back and forth until there's some clarity to what's going to happen on the fiscal responsibility, what kind of real cuts are going to be in the federal budget, what kind of difference will it really make? Is it mostly talk and no action? Is there going to be a lot of action? So I think the metals are just signaling they don't know which way to go until there's more clarity in the market.
While silver's long-term fundamentals are strong, its current market trends reflect a complex narrative. Recent data shows silver prices under bearish pressure, with support levels around $28.30 facing significant challenges. Analysts suggest that without a decisive break above resistance levels, prices may continue to trend lower in the short term. But here's the twist. Market corrections often precede major rallies. The current bearish signals could represent a temporary dip before the next upward surge. With industrial demand reaching record highs and a persistent market deficit draining inventories, the foundation for a price rebound is already being built. David Morgan notes that these fluctuations are part of a broader consolidation phase. The question isn't whether silver will rebound, but when. Investors who understand the cyclical nature of commodities know that such periods often provide opportunities to accumulate before the next rally begins. So what's the outlook? If silver breaks through key resistance levels, it could reignite bullish momentum and attract fresh investment. The key lies in balancing near-term price action with long-term fundamentals. Could this be the calm before the storm for silver? Let's connect the dots in our final step.
Unfortunately, I do not. You're asking me my opinion. You look at Elon and Ramaswamy Vivek, and even with Ron Paul in there, which is one off, and it's hard to fit in, but which could be more libertarian oriented, obviously. But I think they're looking at AI. They're looking at a lot of artificial intelligence doing a lot of the bureaucratic functions that are done by human beings now. Those human beings in the government being displaced by artificial intelligence, where, the welfare department, a lot of these departments that issue checks basically are not eliminated. They're just taken over by artificial intelligence. So I think you're looking at a technocracy, and both Elon and Vivek are very big on technocracy. So that AI leads into the CBDC, but right now you cannot issue a CBDC by the Fed. At least that's the way the law stands. Of course, they're not always abiding by it these days, but let's assume that they would. That means that it'd have to go to Congress, and the Congress would have to vote in, like they voted the Fed in, and say this private banking corporation is allowed to issue a CBDC directly to U.S. citizens. So you could be in a situation where JP Morgan or some other major bank, Wells Fargo, issues their own currency that's a CBDC that is adopted, voluntarily, in quotation marks, to do business, which is within the law right now as it stands. So lots to think about on that realm.